One other interesting thing that I must be aware of is that right after events create reactions, and trading off of reactions is a natural part of day trading. And events causes at the end of a certain period to stabilize in a certain value. But before then, it starts from one location to the other location, and that's where money is made. Um, so stocks tend to move in a repeatable pattern to get to a certain point, but it will get to that point. It'll get to the point where uh, it's 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 very interesting. It's very interesting that the stock will move in a certain situation, a certain move based on the new number of where the stock is supposed to be. Just like, just like, just like a couple of factors. One of them is what is its current earnings, and what is its anticipated earnings for the next period, and that will cause the stock to move in a certain direction and will latch on and stabilize at a certain point. That is the that is the essential nature of what the stock is doing. And when it moves in a predictable manner, and 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 on a probabilistic style of movement. And how does that happen? And how it is predictable can define it can define. And like one of the pro day traders who's made millions stated is that it happens all the time. It repeats in a certain behavior in a certain way. And understanding how certain stocks behave in a certain behavior based on certain news is an opportunity to take advantage and make profit on those situations. Like, let's say, then I can see when a stock moves in a very very violent manner, just like Federal Express. um, It'll either dip in a massive level based on the news trigger that causes people to sell off, and then it'll recover a little bit based on the sanities that is achieved. So there's an overshoot in many of the cases. However, it is very very difficult to pinpoint exactly where that lowest point is, and that is where the tricky nature of what that the trading is. And when the news is significant, what it will do is it'll not everyone is on board at the same time, and therefore the stock starts after the news is relayed. And then as more and more individuals become aware of the news, then there are, such as one of the most things that are stated about stock market is that stocks move up in stairs and yet drops down in an elevator. So essentially, stair step, and then poof. That's how it works. However, when it drops like that, it doesn't really. It's really not a 90-degree drop. It's essentially, there's a slope to it. There's a slope. It stops here a little bit, catches its breath, and then drops more, catches its breath. It's as though there are individuals who are processing the information at a certain speed, and with those certain speeds causes the stock market to deviate in a certain manner. And therefore, to understand how that works is to have a predictable understanding of how the stock moves based on response to the news stimulus that's surrounding it. So, uh, it seems to me the key to trading are those several things. Now that I've and I pray to God that I've vetted out this emotion that's in me. Now that I can logically think and pre-plan what I'm going to do when certain events do occur, and looking at charts and compiling a statistical probability in my mind based on certain events, then I can utilize that information to make the optimal trade. So I should have known when I looked at Federal Express. I should analyze these play by play to understand why certain stocks behave, so that I can better understand it and take advantage of what of making money. It's an interesting. It's wow. It's so so. Essentially, what I'm doing is this. I'm saying to myself, here's what's going to happen, and here's my trade. The basic crux of the stock market gains is to say to myself this: I'm gonna get in here expecting to get out here because of certain situations. Essentially, that's what it is. Essentially that's the trade in a nutshell. In a nutshell, in a nutshell, essentially, trading is about saying I get in here, expecting to get out, and that's it. I get in because of certain reasons, and I'm going to get out at a certain point. But for some odd reason, my predictions are incorrect. I'm willing to get out with a small loss. Essentially, that's what it is. Essentially, that is trading. And the only way to have a higher probability of certain instances of trading is to become more and more and more aware of the impacts of certain news that drives the events to occur that impacts the stock. So most of the time, what I need to do is study are a couple of things. One of them is the stock behavior, and also work on the process of understanding what numbers in a particular situation causes certain behavior to be accentuated or not accentuated. These are the things that I need to focus on. And the things that I need to focus on is um, pattern and impact. Pattern and impact. Pattern and impact. There is a pattern that is established. However, there is an impact that causes that pattern to deviate from the low extreme of flatline to extreme movements in the stock. So essentially, these two things impacts the stock price, which is predictable, which is the pattern and the magnitude. As long as I understand those two primary things, pattern and impact. Pattern and impact.